What is up, everybody? Welcome back. This is the Fresh Finance Podcast. My name is Thomas Elms. I've got my co-host here, Kyle Ryan. Today, we are going to talk about business owners and how financial advisors like us tend to work with business owners, how we tend to provide value, and just kind of start to finish what a relationship with a financial advisor looks like for a business owner. We really just kind of want to hit on the idea that the value that a legitimate certified financial planner can provide for a business owner is not just retirement planning. And that's what we really want to hit on today. We will touch on retirement planning for sure, but really just kind of emphasizing the idea that not only can we help with the retirement planning side, but we can be that second ear, that secondary business advisor that is helping them just essentially navigate through being a business owner. And also navigating and working through the different professional relationships that they have, whether it's an accountant, whether it's an attorney, a special insurance expert. There's so many different atmospheres that we can help provide value all the way down to, kind of that end point, that succession point where you're looking to sell your business, or kind of protecting on the insurance side, making sure that if there's multiple partners or multiple owners, that there's key insurance in place where if a partner passes, that's not going to tragically affect the business. And, Kyle, this is something that we've talked about offline multiple times, but business owners are kind of the most fun clients to work with. And I think the reason is because there's just so many different avenues that can help. And I'd love to just kind of get your take on, kind of that simple fact and how you tend to kind of work with business owners, at least on the front end, kind of the initial conversation.
Yeah, I mean, I love working with business owners. For one, they have a lot of flexibility and control, whether it's in regard to their income, their expenses, their taxes, their retirement savings, what have you. But I especially love working with business owners because, I forget the stat, but it's like 70 or 80% of business owners work more than 40 hours a week. Mm-hmm. So business owners are passionate for what they do, passionate for the business that they believe in and have worked hard to establish and achieve. So these are people who spend all their time working on the business, making sure profits go up, revenues increase, and they're managing and maintaining it. So a lot of business owners, I've found that, while they are very on top of running their business, it's a lot of the planning around the business that, it doesn't so much fall by the wayside, but they're just so busy with other things. It's hard to worry about the right type of retirement plan to set up, worrying about employee benefits and making sure it's the right package. There's so many different things that they could worry about. Estate planning, are you a closely held business? Is it a family owned business? Do you have a couple partners? What are the goals and objectives of the business owners? And that's why, the first thing we do, Thomas, maybe you can explain, this a little bit more for us, but the first thing that we do as financial advisors with any client is begin the data gathering session. And, that's really, I love working with business owners because again, they're so passionate about their business. It's a great time to learn a lot of valuable, data.
Yeah. And before I hit on the data, I just kind of I really liked one of the points you made about just how busy business owners tend to be. Yeah. And, what I've found, and I'm sure you could say the same, is the best business owners, the ones that tend to have the most time, the best time management, is they get really good at delegating different things to experts in their circle. And I think that's where we come into play, is having a business owner pass off different parts of how the business navigates and interacts in different situations, passing that off to an expert that's in their circle that's going to do that to the best of their ability to help overall improve the quality of that business and get that owner or owners to their goals, and to kind of get back on the data gathering side. The data gathering process is definitely a lot deeper when it comes to actually evaluating a business owner, because when you think about how they're kind of, essentially collecting all of this data, is you're looking at the personal side and you're also looking at the business side, whereas if you're working with kind of a traditional, retail investor, they've kind of got their personal assets and their circumstances, and that's kind of it. You're kind of evaluating almost like a secondary piece of that, but that secondary piece can get even deeper than just the personal side, right? Because then we have to start looking at profit and loss statements. We've got to, look at statements of cash flow, statements of income and expenses. We got to be evaluating their balance sheet, right? We got to think about it if there's certain And if there's, major key employees kind of at the top, we need to be looking on the insurance side. Do we have, insurance coverage if there's an owner or a key employee that's passing away? And that even kind of, bulks into the idea of maybe having umbrella policies on the personal side, right? And then we need to look at, hey, how is this business actually structured, right? Is this just a single person? They're a sole proprietor. Maybe it's like a side hustle. Or is this somebody who's got a very well-established business, making millions of dollars in revenue a year, and they've got 30 employees, right? There's just so many pieces that come into the data gathering process that allow us to start asking questions that they either maybe haven't thought about, but also maybe have thought about, but just haven't had the time to maybe reconsider, or maybe they just haven't had a person in place on their team that can actually implement that change.
Yeah. Yeah, no, I mean, getting the quantitative data is incredibly important. And from that quantitative data, you also can't, you also have to factor in what else you can gather from the data gathering session. What else you can learn about the business owner. How many business owners are there? What are their real goals and objectives? And this is what I really love, because you get to learn why they're passionate about it. What do they want? Do they want their family to play a role in the business? You get a lot of data out of, business owners, especially, not that you don't have W-2 employees, but business owners, because you have so much more control, again, over your income and expenses. Control means opportunity, right? You are able to, quote unquote, play the game a little bit more and be able to take advantage of current tax laws, take advantage of current estate planning laws, and really get a plan in place that accomplishes your goals and objectives. That's why, we as financial planners, we're not here to tell you how to run your business. We're by no means, no, we're just an extra expert in your, in your wheelhouse that can help you determine the right solution for setting up a retirement plan. We can help you work with your accountants, determine the right amount of salary you should pay yourself versus profit you should be taking, confirming which retirement plan is the right one, working with estate planning attorneys to make sure you have proper estate planning documents drafted up and are covered from every single angle, so long as you can get your goals and objectives accomplished accordingly.
Yeah.
So, there's a lot of opportunity for business owners to, take advantage of current laws.
Yeah, for sure. And there's even conversations, I had a client that we're working with right now that, we were dealing this right about a year ago, but we were essentially having conversations back and forth with the business owner. It's a husband and wife kind of, jointly held business, and their CPA and their team, and kind of talking through, they've got a couple of employees, and we were essentially kind of navigating what the different tax differences would look like in relationship to keeping those employees W-2 or making those employees 1099 independent contractors, right? Because that plays into a couple of different things, because if they're W-2, then that company has to also cover all the payroll taxes, right? They have to cover all the benefits. So they're kind of evaluating how they're doing that. And also it's going to affect what the owners can do on the back end for their retirement plans, right? And so there's just kind of a lot of different situations that come into play. And also one of the things too is businesses are, in my opinion, more fluid and are changing more often than maybe just a retail person's just traditional work history, right? Especially year to year when it comes to income, when it comes to revenue, when it comes to tax situations. Because if you've got somebody who's a W-2 employee, for the most part, their company is covering their taxes and their income is just kind of gradually increasing. But with a business owner, they could struggle for the first couple of years and then hit that mark and income just skyrockets, right? Yeah. Now we need to, in that year, evaluate how can we create tax advantaged opportunities to either lower their tax bill or put them in a place that's going to allow them to continue to progress in that way. And I think one of the best things for us is we can leverage the other clients that we work with to provide insight into different strategies that we're deploying, even if it's businesses in different industries, right? And I think that's where, kind of that professional, almost like a business advisor relationship looks like, because one of the conversations that I had a couple of months ago with a client who's a business owner is one of the things you really need to look at as a business owner on the succession planning side, on the sell side, is how sellable is your business at the end? I think that's a really hard-hitting, important question, because everybody thinks that they can just start a business and then just sell it. at the end. My thing for this is you really need to figure out how unique that business owner's role is to the actual company. Because in my opinion, and I've dealt with this in a couple of different situations, but I think most consultants, most business owners who are consultants, where it's like, it's their genius, it's their mind, it's their expertise that's providing the value in the business. If they try and sell that business, they're selling the most important asset, right? Because most business owners think that they can scale and build a business and then just sell it at the end. Well, if you're the main asset, you're essentially just kind of selling yourself off, right? Now, obviously, there can be opportunities where that business is sellable, but it begs a question: should we be really reinvesting everything back into the business? Or should we be trying to replace what that sell value is with retirement plan contributions, right? I think that that's kind of a really interesting take on kind of the reality of a long-term, business plan for sure.
And you made a lot of great points. And I think one of the most valuable things of our role is that we get to see the evolution of both the individuals, whether they're accumulating money, going through retirement, living in retirement, and also business owners. We get to, I've seen businesses start, seen them progress. They go from what, they're a sole proprietorship. They have a SEP IRA. They get a couple employees, simple IRA. They get even more. It's a 401k, so there's business evolution that we get to work with. And it's really fascinating and encouraging to see. And alongside that, the entire time you're working with them and understanding their goals and objectives, right? Because if you have a family and you want to pass it down to your family, it's much different than if you're planning to sell it, like you're mentioning, right? If you're selling it, or say you have a partner, right? What happens if one of you guys gets disabled? What happens if one of you dies? And then it goes to, that person's wife or spouse, wife or husband. And do you want that person to be involved in your business and start making decisions? So these are the hard questions that, a lot of business owners know are out there, that they know they need the answer to, but it's kind of, a lot of them, it just gets pushed to the side until it has to happen, until it's forced. And that's why our role is to just raise the right questions, help business owners change the way that they think about their business, because you're spending so much time running it. We can be the ones to help you improve the transition of the business, the viability and survivorship of the business. Again, I don't know the percentage, but a huge percentage of sole proprietorships have absolutely zero business succession plan, or zero, plan to sell. And there's a lot of different ways with which you can protect the risk there.
Yeah, for sure. And I love the progression conversation, because I think that that's where we would provide value, almost like, if we were working with somebody as a retail client who's fresh out of college, right?
Yep.
It's kind of, they're starting from ground zero and they're slowly just working up, building up. But while they're building, there's so many different life changes that are happening. And I think that those life changes also happen within a business, right? Whether that's from a revenue perspective, if you hit certain milestones, whether that's from an employee count perspective, when, you're hitting certain milestones. And, there's just so many different key pieces that I think that we can provide value as an independent voice, kind of as a non-financially invested voice that can provide kind of that clear-cut guidance, advice, and recommendations. But also we can be the implementers as well, right? Yep. Especially on the retirement plan side. Now, obviously we can help kind of navigate if we're making, possible tax planning, observations. We're working with their, accounting teams to make sure that, that's within the scope of the engagement, and, they're implementing those things. But, there's so much that we can help take off of the plate, off of the shoulders of a business owner, that I just honestly, I think a lot of business owners don't necessarily take into consideration, or maybe just don't know about as well. I just think that from start to finish, there's so many opportunities that an advisor can provide value, that it's just something that it can't be overlooked.
Yep. Yeah, no, it's really, again, it all just comes down to our role is as an expert on your team. And there's going to be multiple experts, ideally, right? The accountant, the attorney, and we just have to all be working in conjunction with the business owner's goals and objectives in mind. And that changes over time, mind you. That's why, consistent reviews, annual reviews, semi-annual reviews, whatever the business owner prefers. But that's why you keep going over the plan. You keep going over, your financial plan, your plan of attack here, to constantly review and make sure that if there are changes that need to be made, you're aware of them. Because again, businesses evolve, people evolve, life changes. It's a guarantee, right? It's very few times I could say the word guarantee, Thomas.
Exactly, right?
Things change. right? So you have to have a team of experts that's available to you that are looking after your best interests that will help guide you along the way.
Yeah, yeah, for sure. And there's just, to kind of your point, I think too, there's also some value that we can provide, and also the other independent third party professionals that we work with outside of that client situation, right? And there's case in point, there's a situation that I ran into where we had a client move from Utah to Kansas City,
Okay.
and they decided that they wanted to shift to an account that's in Kansas City, right? And so we essentially utilized our network to get them set up with somebody that we already work with frequently, that we trust, that we recommend, and it kind of improved the value that we have added, because we've essentially allowed them, as they've transitioned to a new state, that they're now working with somebody that we have familiarity with, that we know how they work, and they're going to then provide good tax value for them.
Yeah.
And there's just so many evolving situations too, especially on the tax side, especially on the estate planning side, and even on our side, like on the investing side. I think one of the biggest things that we can provide value is the ever changing regulation, right? And staying on top of that so they don't have to, right? The estate planning conversation that we had offline a couple of days ago, talking about how, Tax Cuts and Jobs Act, once that's eliminated, the estate tax exemption is going to drop dramatically, right? So what does that look like in relationship to how we're going to be setting up either personal trusts or any sort of estate planning in relation to the business, right?
Yeah.
And how is that going to, navigate the framework of what their financial plan looks like?
Yeah. And I mean, I've got a number of, call it horror stories, but, I've got a number of cases where people weren't exactly, I've worked with a $30 million business before, and the business owner died and they had absolutely no plans. They're well above the estate tax limit. So the children are like, woohoo, we're inheriting this really big business. But then all of a sudden they actually have to sell off a lot of the assets because they have to pay for the taxes on $30 million. Well, not exactly 30 million minus the
Yeah.
exemption, but, a significant amount of taxes. And these are people, if you're inheriting in your 30s, 40s, it's not like you exactly have $1 million, millions lying around to pay taxes. So, you have to liquidate the business, which I would imagine was not the intent of the business owner when passing along to his children. So again, planning it's like the estate planning conversation, right? Don't let the government be your primary beneficiary. You want to know how your estate is going to be passed down, and you want to do everything in your power to make sure it's how you want it to be. And that's why business owners, we've jumped into a lot of different topics because there's a lot of different things to consider. It's what we can hone in on one, you can work with experts in one, but really you have to look at the whole picture. What happens to me if I get disabled? What happens if I prematurely die? Where do I want it to go? And just ask yourself these questions. That's again, we want to change the framework with which business owners think about things. We're not here to run your business. You're the expert, you know it better than we do, but we want to help you, we want to raise awareness to the things that we think you ought to be considering.
Yeah. And provide value and growth in the things that we can, take control of.
Yes. Yep, absolutely.
And there's no guarantees in the stock market, but providing value in how we strategize, an investment portfolio for an owner's retirement plan. And if they're, really generating revenue, looking at some of the top tier kind of very specific retirement plan programs, cash balance pension plans, things like that most people don't know about, and actually know how to navigate those correctly. Right.
Oh my God,
and
yeah.
there's just so many different opportunities. And even on the sales side, right? So if you do have a business that's sellable, looking at how we can try and mitigate the tax consequences of selling a business, especially at a large dollar amount. Whether that's, maybe investing portions in opportunity zones, whether that's, finding tax deferred options, on the sale of the business, whether it's navigating a relationship that instead of a one-time lump sum is maybe a multi-year, revenue payout. There's so many different opportunities, kind of like I said earlier, from start to finish that, we can really provide value there.
Yeah. Oh my God. I love the last point you just made. I mean, we're working with someone who's selling his business to his children, slowly and surely. He could do it all at once, sell it to him, but then, he's taking the capital gain all in 1 year. And it's just, there's so many different strategies and things that you could do, and just things to consider as a business owner. It's, that's why this was a really great episode. I'm sure we'll have more on the business owner series, because again, it's one of my favorite types of clientele to work with. I love the passion, and I love hearing about, why people got into what they're doing. I find business owners to be passionate, they're hardworking, they're driven, they're great. They're just in general great clients to have.
Yeah. Yeah, for sure. Well, that wraps it up for me. You got anything else?
No, that's all good. It was a great episode.
Perfect. Sounds great. Well, hey, thank you everybody for listening. Thanks for watching. If you're doing a little bit of both, we really appreciate your time, and we're looking forward to next week's episode. Thanks, Kyle.
Yep.